Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Welcome back to the Mining Pod. This is your one-stop shop for Bitcoin and Bitcoin mining news. I'm Will Foxlane, joined by Colin Harper, both of Blockspace Media. Colin, how you doing today?
I'm doing beautiful, Will. Little smoke rolling into the beautiful city of Grants Pass, but hopefully that'll subside soon. Yeah.
What's going on there?
There's a lot of forest fires in Oregon this year, but it's kind of like every year.
Yeah, classic.
So, but doing good, man. We got some interesting news segments lined up today. Sort of a slow week for news in the mining industry, but a few bigger ticket items that definitely bear mentioning. But before we do that, would you like to take it away with a little difficulty hash rate update for us?
I will take it away. We have a lot of things to talk about. So I'll do a little roadmap first. We're going to talk about the difficulty update, Galaxy possibly pulling another savvy move, picking up a team that's going into Chapter 11. Then we'll go over to this mining in space tweet from Peter Todd and a Y Combinator team that is like working on some really cool energy projects in space. Thought that might be a fun one. And then talk about sentiment on the timeline. Like you mentioned just there, it's really bearish, and I have some charts to kind of show that. And then we'll finish up with our cry corner, which maybe because the sentiment's bad or whatnot, there's just like a lot of things to pick from, and we have quite the horrendous thing to end the show on. So stick around for that.
Maybe the cry corner is emblematic of where we are currently in the cycle.
The cry corner today is pretty robust. Okay, so let's go to our difficulty update. This is from our friends over at mempool.space, one of the best places to go and check out the mempool. So for on the week, in terms of mining, not too much, 4% upwards difficulty adjustment. This has been following a steady path from the Bitcoin halving in April, and we are almost out of the doldrums of low hash rate post Bitcoin halving. Like, we went down quite a bit. We kind of peaked in April at 88 trillion difficulty, went to a low point of 79.5 trillion difficulty, and now looks like we're past that 88 point, we're at 89.47 trillion difficulty, and hash rate is basically back at all-time highs. It's like around there, just depending on who you're looking at. But I think you mentioned, Colin, the 7-day trailing is still slightly below all time, but we're basically
the 7-day is like 675, 676. And I think we just hit like 671, but to your point, like basically back at all-time highs. I think this is indicative of a lot of low-cost miners being flushed out, a lot of the mega miners deploying next-generation machines like the S21 and M60 series. So kind of in line with what we expected. Still don't think we're going to get to a Zeta hash by the end of the year, though. I think there's been a lot of slow growth over the course of the last quarter or so. It'd be interesting to take bets on where we think hash rate will be, but they always end up being all over the place and no one ever ends up getting it right.
I will say last year's were horrendously wrong. People were like 300, 350, and it was like 600 in a view.
Yeah, it just blew up.
Yeah,
for sure.
The people were like 350 was like a liberal play, not even a conservative bet. So
right. And it changes so quickly because right now we're going to be making it based on all-time low hash price and Bitcoin chopping at around 58K. Shout out 58K gang. But if anything turns one way or the other, right? If Bitcoin rips or Bitcoin plummets, then that changes the equation entirely. So it's really kind of like reading tea leaves. You never really know what you're going to get down the road.
Definitely. I think the only other things to mention is pubcos are continually plugging in new units. We're seeing S21 orders. There's another Hive order this morning for just like 1,000 units, but there's that. And then we talked with the power guys. That episode will be coming out next week. And they talked about how they have a bunch of S21s that they've been deploying. So people are deploying units. Difficulty will continue to go up, even though hash price is at the lowest point ever. And then fees are not doing anything for Bitcoin miners right now. We're like 4 sats per VByte. So if you do mine Bitcoin and you have some old mining wallets that you need to consolidate, this is a great time to do it. But yeah, that's all we have for the difficulty update, because it's just like painful and slow right now for mining. That being said, we do have some good information from the Rhodium case, which we're going to update. So I'll pass it off to you to talk about that. And that falls in line with the general story that a lot of teams are consolidating, picking up other teams, all that sort of stuff, M&A.
Yeah, 100%. And to back up for 2 things, not M&A yet with this, but there is an angle there. Number 2, just to give context for those who did not see the news that Blockspace broke, and that we reported on last week, had a pod on it as well, covered it on the last week's roundup. Rhodium is filing for Chapter 11, already has filed for Chapter 11. So they're trying to restructure their business. They're underwater, and they're trying to access debtor in possession financing to operate through and hopefully emerge from the bankruptcy. And Galaxy is one of the lenders on the table for them. I need to go through the actual court documents and see if there are any other lenders being considered. But right now, Galaxy Digital is the one that has come out on top in terms of considerations for Rhodium. They are offering $30 million in cash or a 500 Bitcoin loan. Very interesting. I mean, as the Miner Mag article points out here, we've not really seen Bitcoin loans being offered for something like this before. So I hesitate to say a first, but definitely a novel approach to offering financing to a company in distress. Now, the interest rates on this loan are pretty ghastly. I mean, it's 14.5% for the cash and 9.5% for the Bitcoin. Be curious to see which one Rhodium ends up taking out. For a little bit of context there, obviously interest rates are going to vary widely across any different industry in terms of what you're offering a bankrupt company to, basically restart their business, depending on how many secured assets they have, depending on the industry, depending on the outlook for what that company can do. You're going to get a wide range of interest rates. But I looked up a few interest rates for debtor in possession financing from different industries. For the construction industry, you're looking at like 5 to 10% for a cash loan. I also saw interest rates around 7 to 9% for other bankruptcies. So the 14.5% is definitely on the high end. Now, obviously, this is with the backdrop of the Fed funds rate being higher than it has been in years. That'll come down in September, most likely. At least the market seems to have reached consensus on that. But still a high interest rate, not really something that you want to stomach, especially as a company struggling to stay afloat. Last thing to note on this is almost kind of the reverse approach that Galaxy took with Argo in 2022. Argo was undergoing financial distress. Galaxy ended up purchasing their Helios facility in December of 2022, and they offered Argo a $35 million loan to operate and to actually use to kind of continue their operations. Argo ended up hosting or basically renting out rack space at the Helios facility after this acquisition was created. So what we're seeing here is almost like the inverse of that. And, some bankruptcy lawyers or some folks in finance and specifically mergers and acquisitions would speak better to this. And they would, if you are in that realm, please correct me if I'm wrong here. But this almost seems like an opportunity for Galaxy to jump in and take possession of the assets that are going to secure this loan. Because in the Rhodium case, as far as I can tell, all of the unsecured creditors and most of the creditors are actually Rhodium subsidiaries. So Rhodium doesn't have that many creditors that they are on the hook for. And if Galaxy offers them this loan and they take it, it's going to be secured with Rhodium assets like their mining sites and their machines, all of that stuff. And if they default on this loan, potentially Galaxy could take possession of those assets. So it'll be really interesting to see if this ends up being a smart play for Galaxy to get assets on the cheap, or if Rhodium can really turn this thing around and come out of this solvent. We saw that most recently with Core Scientific. It's not impossible, but it's going to be a big uphill slog.
Yeah, to me, the thing that stood out about this was just the savvy use of Bitcoin on a balance sheet. So Galaxy has about 30,000 Bitcoin on their balance sheet that they actively use for providing liquidity to the Bitcoin ecosystem, namely like ETFs. Talked a lot with Alex Thorne and the research team over there about how Galaxy's been positioned with the Bitcoin that Mike Novogratz had purchased way earlier in his career. And now that comes into play with their mining business, right, where they're able to do miner financing, aka MiFi, and provide liquidity to some of these teams that are in a bad situation, like Argo in the past and now Rhodium, or they're able just to expand and purchase sites as they want to. I think like this sort of deal makes sense where on one hand, you can get a really nice interest rate for just loaning out some Bitcoin or some dollars. And they could even take out a loan against their own Bitcoin and then give that to Rhodium if they wanted. So there's a lot of ways to skin this. Or if it goes south and Rhodium needs to bail, like you just get all their sites and then just expand your operation. And so
it is pretty a low risk thing for Galaxy if you have that Bitcoin treasure trove, right? Now that's assuming that they end up taking the money from that Bitcoin. But there's also a consideration here, and I could be totally wrong, but if you have that Bitcoin, you could lend that out to someone else, right? And then you could basically take the cash from that and then rehypothecate it into this loan too.
Yeah. There's a few ways once you have the Bitcoin. Once you're well capitalized, you can do a lot.
Yeah.
So, but to your point, like Rhodium has a lot of deals. There is like a lot of lawsuits with Rhodium, namely the biggest one against Riot or with Riot right now. So I wonder how that would sort of be structured into something like this. Would some of these JV deals break up? Would it become Galaxy's problem in the case of that? I'm sure their legal team has been all over it, analyzing it. But this is certainly a nice lifeline for Rhodium in terms of cash on the balance sheet if they're able to do this. But we'll see if they pull it off. The Argo story is obviously very interesting. We did a whole documentary about that. So you can go check that out on the Mining Pod YouTube channel, or just search like the Big Empty on YouTube and it should pop up. Okay, so let's actually pivot and talk about Bitmain a little bit. So Colin, you put this nice piece together discussing the S21 series and how there's been like this treadmill of new Bitmain ASICs that are more powerful, more efficient than the last unit, and they're coming quicker and faster. And it might be exhausting some of the miners out there who are ordering a set of units in the future, and they're quickly becoming outdated before they even land.
Yeah, so for this week's newsletter, I wanted to tackle the problem of ASIC prices. I think this is something that miners are always paying attention to, but it's kind of a world apart from most of the other considerations in the Bitcoin landscape, right? So people aren't thinking about computer prices for mining Bitcoin as much as miners are. But one of the casualties, obviously, of the Bitcoin halving is that these ASIC miner prices are at all-time lows for a lot of models, right? So all of the prior generations, like the S19, they're selling for pennies of what they originally fetched during the last bull market. It cost at the peak of 2021's mania in October and November when Bitcoin hit an all-time high last cycle. An S19J Pro is running like $12,000, $10,000 to $12,000, depending on where you bought it. Those models now, you're lucky if you get 300, right? So ASIC prices have just been pulverized, obviously, because hash prices at an all-time low. But one of the things that I didn't consider going into this, I thought this was just going to be a basic hash prices at an all-time low. Inventory isn't moving. Miners don't want to buy them. It makes sense, right? It's basic supply and demand because you can't produce as much. But one of the things that one of our sources in this article, who asked to remain anonymous, told me is they think that one of the problems is that Bitmain oversubscribed for their wafer allocation. So when you go to a big foundry like TSMC, you're buying by the wafer, which they're these massive sheets of ASIC chips. And you're not just buying individual chips, right? Like you're buying as many as you can. And because of this, you get ASIC chips with basically different, how should we say, power ratings in terms of how many computations they can produce and how powerful they are. And that's why you see all of these variations in different models with Bitcoin mining ASICs, right? So when the S19 series came out, it was the S19. If you can actually scroll down to the second chart here, I think this kind of really illustrates it. So for the S19 series, you had dozens literally of sub models, but you started with the S19, then you had the S19 Pro, S19J Pro, S19 Pro Plus, S19 XP, et cetera, et cetera. And the reason for that is the chips that go into the hash boards for all of these different machines are of various calibers, right? So they save the really good chips for their flagship models in a new series or the most powerful ones. And then they save the, chips that aren't as powerful for some of the sub models. And one of the problems that Bitmain has currently faced is with the S21 series, potentially, this is unconfirmed and kind of like a hunch based on our source, but they're one of the most well-connected brokers in the space. So I trust what they're saying here. It's possible that Bitmain purchased so many chips that now they have to come up with progressively more efficient and powerful models to actually make use of all of those chips. And this is coming at the worst time because no one wants to buy because hash price is so low. So you'll see right here, one of the points I make in the article, the S21 came out in September of last year. Great, super powerful model, the first sub 20 joule per terahash model out there, 200 terahash rating. Miners rejoice. They can finally make money after the halving. Their margins are not going to be destroyed. Well, then they announced the S21 XP in June 2024, right? So basically 9 months later, you have an ASIC that is pretty like a few magnitudes more powerful. It's 270 terahash rating, and it's 13.5 joules per terahash. That 4 joule per terahash difference might not seem like a lot, but in the grand scope of things, when hash price is like $40 per petahash per day, that adds up really quickly. And to put that into perspective, when the S19 launched in April of 2020, the first huge leap that you had in terms of efficiency was the S19 XP. And that came out more than a year, like a year and a half later. So Bitmain is releasing new models a little too quickly, a little too closely together. And miners and wholesalers are sitting there thinking, well, why would I buy pallet loads of this S21 when in a few months there's going to be one that comes in that totally obsoletes it? So a good example of this is a lot of public miners had S21 orders, and Bitmain actually upgraded those to S21 Pro orders without charging them more because the miners were so disgruntled. So they've kind of found themselves, and I don't know whether or not to call it a catch-22 or a chicken and egg problem, but there is this dilemma where Bitmain wants to move this inventory. They need to produce super efficient machines and powerful machines to keep their standing. But if they do that too quickly, miners are not going to want to buy some of this new inventory because it's not worth it for them. They would rather wait until the next best model comes out. And one last thing to point out here, Bitmain kind of has to do this in some ways. Every year they have to up the ante with TSMC, which is the best chip manufacturer in the game, because if they don't continue to increase their allocation each year, TSMC might deprioritize them. They might not get the chips that they want for the most efficient machines, right? And they might actually lose their allocation entirely. So Bitmain kind of has to continue to purchase more wafers than it might need. Otherwise, they're not going to have a seat at the table with TSMC, which really is kind of not a dangerous dilemma, but a difficult dilemma for Bitmain to be in, because they want to hold their dominance, right? But if they continue to purchase more wafers and more ASIC chips than they can sell, then that's going to hurt their margins. One last thing to point out here, this is tinfoil hat, Alex Jones universe conspiracy theory. But part of me couldn't help but see this in dialogue with Bitdeer, because Bitdeer is purchasing chips from TSMC as well. So one has to wonder, did Bitmain just go super hard to purchase as many chips as possible to keep Bitdeer's allocation lower than it otherwise might be? I don't know if that's how it works. Probably not, but it wouldn't surprise me if something like that were at play too.
That's a fun thought. I hadn't thought about that. That's good. It's a good zag, as they say. Good zag on the pod, Colin. Because Bitdeer is in TSMC. That's the thing. MicroBTs with Samsung, and they get less chips. I don't think it's high of quality. Those sort of things. Samsung is always having like these labor union disputes. So it's an interesting point you're making there. Brandon Bailey did a really good job on the podcast with you, talking about how Bitdeer has this whole ASIC manufacturing play that they're building out. And of course, there's the huge history between the Bitmain co-founders, and Jihan Wu now being the CEO and founder of BitDeer. Okay, for this one piece, I want to point out just a few things, which one was the new unit that's kind of circulating around a little bit, the U3S21EXPH. We'll talk about that more in our conversation with Checksum from Power. So we talk about that unit specifically and what it means, but it's a lot of hash rate. It's a little more expensive, but the hash rate is 860 terahash, or at least those are the numbers circulating around at 13 joules per terahash. That's a beast, and it's for AI HPC plays. The other thing I'll note is that
why do you say that? Because first of all, it's a water cooled model, so
because of the form factor is what we kind of got into this podcast. So
right.
I'm teasing a little bit ahead for next show. But the thing I've learned from Ian at Power is that the form factor specifically will work well with AI HPC.
Okay.
Sites.
Yeah, the server rack, the server rack versus the shoebox.
Yep.
One thing I do want to highlight that this is a hydro miner. Some people are bullish on hydro. I kind of make the point in the article. I don't understand why Bitmain is pushing this. I heard a rumor, unconfirmed, from a Bitmain employee once that it's McCree's baby. He really is pushing hydro because it was his idea. And honestly, there's a lot of evidence against it. It seems like immersion is the preferred method of advanced cooling for some of these miners. But some people really like hydro. So maybe I don't know what I'm talking about. But
well, the only thing I wanted to point out before we move on to a few more fun topics, notably space mining in a second, is that Bitmain still has the lead here. Whether or not this is too expensive or the treadmill's moving too fast for Bitcoin miners, Bitmain still has the fastest shipping. They have the best return process. They have the lowest DOA rate. They have the most efficient units. They have the most powerful units. They have the best support. So that doesn't seem to be changing. I think all eyes are on BitDeer with not their first series units, which will just be in-house, but their second and third series of Seal miners, which are forthcoming probably sometime next year. Great piece. Go check that out on the Mining Pod newsletter. You can find a link in the show notes, or go to miningpod.blockspace.media. You can find it, or just go to our website, blockspace.media. Let's go, Colin, to this next piece, and we'll have a little video for those watching on CoinDesk TV or YouTube. Okay, so let's dive into this story. I think this is one of the cooler ones that we could really talk about, and that's Bitcoin mining in space. Is this even possible? This whole segment was just spurred on by a Peter Todd tweet. He tweeted out a quote tweet of this video from Y Combinator and was like, hey, we can have like Bitcoin mining in space sooner than we thought. Basically, this company is going to put out huge solar cells into space. And then I think per that video, their idea is like to park batteries into those solar cells and then rocket launch up and down batteries that people can just use on Earth. Now, there's been some similar ideas where people like take giant mirrors and point solar energy down at solar stations here on Earth that power batteries, and that was plugged directly into the grid. This sort of seems to be something that's more rocket intense, and they have like these battery packs that go up and down. In this quote thread, this tweet thread that we'll put into the comment section, there's just like some interesting thoughts about like what Bitcoin mining in space could look like, how heat sinks would work in space, just a bunch of different things about how Bitcoin in space could operate. So I want to talk about it on the show because not too much going on in the timeline. Any
so we should talk about total fantasy applications of Bitcoin mining.
I'm here for it, man.
Yeah, it's the idea is super solar punk and interesting to me. I'm not a physicist. I'm not an engineer. To me, it seems like you're going to waste more energy sending rockets up to space to bring batteries that you're charging in space down to people on Earth. That doesn't make sense to me. Maybe having them up there for space missions and for space stations, I don't know. Maybe that makes sense. This whole thing seems kind of memey to me, and cool, but maybe not the best allocation of capital. The other thing I would say about Bitcoin mining in space is I think the reason why Peter Todd in that thread was warning against it is you have a latency issue where the information that you're broadcasting from space to Earth, there's a huge delay with that, right? So if you're mining a block in space, you might end up publishing that block to nodes on Earth when another block has been found, either simultaneously or right after it. And you would basically have constant chain reorgs. So if you were going to actually have Bitcoin mines in space, you would have to have an alternate chain or some other way to solve for that latency, right? Because as far as I understand, that's kind of the main problem. Maybe if it's directly in Earth's orbit, the latency wouldn't be as much of an issue. But as far as I can tell, that latency would basically lend itself to constant reorgs. So I don't know if it would even work very well. Not to poop on your solar punk, space 2001: A Space Odyssey dream.
Yeah, there's an issue with Bitcoin once you start going multiplanetary. And there's a really cool blog series about this from like 2019 bear market, produced a lot of interesting thought pieces.
Who wrote that? Do you remember? I remember this piece.
I can't remember, but we'll have to do like a read of it, like a video essay of it, because it's a pretty interesting piece. But I do think like there's something to having these sort of like energy space stations. They're pretty cool. Especially if the cost of rockets continues to go down, the cost of like getting these rockets up and down, and you're just like bringing up these battery cells and bringing them back down to Earth. And, if the business side of it makes sense, that's pretty awesome. And then, if you have all these solar panels in space versus on Earth, that seems like a net benefit. Now for Bitcoin mining, the latency is obviously an issue. There is the Blockstream satellite, which is pretty cool. So I don't think that'd be an immediate issue right now, but I do think that could be one concern. In general, it's just a CapEx thing though, right? Like who would spend a lot of money to put this up there? It would just be more for fun. And we've seen teams do this. We've seen people send like Bitcoin nodes to the moon and Dogecoin nodes to the moon, Dogecoin wallets to the moon, stuff like that.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Okay, let's leave space for now, come back down to Earth. And with us coming back down to Earth, we'll say that prices have also come back down quite a bit and sentiment is down. So I'm going to pull up two charts here for those on YouTube or CoinDesk TV. The first one is this weekly crypto asset flows from CoinShares. They keep track of like the inflows and outflows of the general crypto ecosystem. And you'll note that over the last few weeks, we have just had pretty poor interest and sentiment. So this kind of numbers the weeks by year, 52 weeks in a year. And basically all summer, we've either had net outflows or like very marginal net inflows, which shows you that there's not a lot of capital interest in coming to Bitcoin or crypto right now. Beginning of the year, you can see that there's crazy inflows. And from memory, those inflows are pretty large compared to the history of Bitcoin as well. So like Q1, we saw Bitcoin price almost double. We saw a lot of allocations on VC land, and we saw a lot of flows with ETFs. But since then, it's been pretty spiky. And in the last few weeks, it's been really boring. The next chart I want to go to is this one on Ethereum ETF volumes versus Bitcoin ETF volumes for the first 25 days. This is from our friends over at Galaxy Digital. And as you can see, there's just like not that much interest in Ethereum counter to some of these Bitcoin ETFs. And I think for me, the walkway is like people are pretty interested in Bitcoin. when it became available as an ETF. I think a lot of people who were wanting to add this to their portfolio were really just looking for Bitcoin exposure, and they're not too interested in any of the altcoins. And I think that does have a drag down effect on the rest of the market, where if some of these other coins don't get a nice bid, then people just are not willing to play. They're not willing to enter the casino. And that can generally also have a reverse impact on Bitcoin price, where Bitcoin price doesn't move too much. But yeah, I wonder if you had any thoughts on those two things, and then general sentiment of like mining stocks at the moment.
Not necessarily too much insight. I mean, the fear greed index, we're clearly in the fear, and we're in the fear territory currently, which I think is good. People get bearish sentiment and they get scared, and they're, having the froth kind of cool off is a good thing. I think people are, I don't know. I get why people have bad sentiment right now, because everyone in crypto is like a serotonin junkie and is used to seeing double-digit returns week over week. But that's just not that's not sustainable. It's not reality. I think you can especially see this in the Bitcoin mining stock ecosystem. A lot of people complaining about lackluster stock prices over the last month. Like, I'm sorry, Core Scientific's up like 180% year to date or year over year. A lot of these stocks are down year to date at this point, but they had times where they were double or triple their valuations from coming into the year. So, if you're trading stocks and you didn't take profit, then that's your problem. These valuations that they're commanding and the returns that they've had sporadically throughout these bull markets and these run-ups in Bitcoin price are just insane if you compare them to literally any other equity. So I think everyone needs to zoom out and just calm down. We're definitely consolidating right now, chop solidation, or whatever checkmate he calls it. The biggest question mark, I think, over the market over the next year is what happens with the Fed's funds rate, how much new money supply comes in through the M2 to grease markets, and what does the labor market do in the United States, and do we end up actually having like a 2008, 2007 style recession, right? I think that will drag on Bitcoin's price. But I think everyone, generally speaking, has this 4-year cycle mentality. And if we end up actually just juicing in Q4, I think we do live in a simulation, because it's kind of crazy how often the 4-year cycle follows the same trend. I'm not convinced that we will. I think that Bitcoin's more institutionalized than ever. It's really fitting into the macro landscape, and it has a place as a serious asset in people's portfolios now. I don't think people should expect necessarily the same type of crazy market action we've seen in the past. But I'm typically the wrong person to ask about this. I don't trade, and there's a reason for that. Every time I think one thing's going to happen, something else happens. So just counter trade me.
Bearish, Colin, bearish.
Exactly. I am bearish, which maybe is a good thing. I think that a recession is going to be really hard for Bitcoin to shake.
I think it would be as well. Bitcoin's definitely driven by interest rates and liquidity, and recession would impact that. I think from my perspective, just working in content and media, we've definitely seen less interest in Bitcoin content, Bitcoin mining content right now. And I'm seeing that from other content creators out there. Our friends over on Mining Mafia posted a tweet about this, how in like June, a lot of their engagement spiked to like all-time highs, like crazy engagement on Twitter. And then right now it's like microscopic comparatively. Mm-hmm. And I think we're seeing that across all crypto media, where a lot of people who were just here for fun and gains at the beginning of the year have left, and they're not here. And they'll be back when the prices start returning. But I think we have reached maybe a low point in sentiment over the summer.
Which is hilarious, because we're at 58K. I mean, this is insane, guys.
Yeah, I know. It's like very high.
We're I mean, that's, again, just zoom out. We need a little perspective.
Zoom out, they say. Okay, well, we'll zoom out to probably a place you don't want to go, Colin, as our Cry Corner. And we're going to talk about the newest in vaping technology. We got this little video. I'm going to add to stage. If you're watching this on YouTube or CoinDesk TV, you're really witnessing something right now. This is called the Puff Paw. They raised $6 million in the seed round to bring vaping.
Tokenized vaping? I mean,
to Web3. Or are they bringing Web3 to the vaping industry? I'm not quite sure.
can I just go off for a second?
Well, you got to describe first what it is, and then
so this appears to be a gamified vape where you're paid puff token to just crush your vape throughout the day, which people don't need an incentive. It's nicotine. It is the strongest form of nicotine that we have distilled as a species. Anyone who vapes or who has had a vape know that they are extremely addictive. What is the matter with people? This is absurd. This is the Southern Gothic evangelical in me says this is Satan. This is wrong. This is so strange. And I think the gamification through tokens thing was a huge narrative plug in like 2017 or 2018. So it's almost like they pulled this out of the crypt or something. It was like, remember this thing? We were going to say that we're going to gamify people to like use their Fitbits and be active, or we're going to gamify people to go to the doctor for checkups, and we're going to gamify people in the grocery store to buy healthy food. And this is like the exact opposite of all of those things. It's gamifying something that is actively worse for you than not doing it. And I personally think actively worse than smoking actual cigarettes. I'm not telling anyone to go smoke a cigarette, but like a natural additive free cigarette versus whatever chemicals go into these vapes, I have a really hard time believing that the vape is a healthy alternative. I mean, these things give people popcorn lung. This is the strangest thing
and
I have seen. And tokens.
I think you're losing sight of the possibilities here. So, yeah, according to
a bunch of founders to enrich themselves, the absurd, this probably the strangest and dumbest thing I have seen. Can we please go back to meme tokens? At least the nihilism there is bald faced, right?
This is kind of a
new kind of existential token nihilism that I just can't really square yet.
So let me read a little bit from their tweet thread. They said, quote, with 1.3 billion smokers globally and nearly 1 in 4 Gen Z adults vaping regularly, our mission is more urgent than ever. This funding milestone puts us at the forefront of D-Pen infra to integrate blockchain with health conscious vaping. So I believe they're actually trying to
reduce vaping.
Vaping, and then you get paid in the puff paw token in order to do this. They have a ton of people on this cap table, and it's built on bearishh, which is this cycle's flavor of an Ethereum L1 spinoff. So we're looking forward to learning more about that chain in the near future and all the wonderful gadgets built on top of it. But PuffPaw is labeling itself vape to quit smoking and earn. And so, yeah, it's an incentive model to get you not to vape, as opposed to last cycle when they had like the running app where you'd get paid in a token to run. Now, the question, of course, is like, where does this money come from? And I just don't think founders really get that far. So maybe there's like some sort of government incentive programs.
Well, you know where the money comes from. It's just a token.
It's a token, but at some point these things run out. So you'd hope that they'd
it needs
finish the flywheel. Sure. It needs liquidity.
No one's going to buy it. If it is, the incentive is to smoke or vape less, then you like clearly have conflicting incentives. Like, are they going to manufacture their own vapes and then want people to use those less? And did you not think of that? Do you know what I'm saying? It's like, if the whole point is to get people to smoke less and you're selling them vapes, doesn't seem to make sense. This is the dumbest thing I've seen in a long time. And there's a lot of dumb stuff in crypto.
That is why it's on our Cry Corner, because normally we're making fun of dumb stuff that happens to people who get involved with the casino. But this week we are the ones crying because we're involved in this industry.
So sad. We used to be a proper country. We used to smoke Lucky Strikes.
We'll close out for the mining pod. Thanks for sticking around with us. If you enjoyed it, stick around for next week. We got an interview with a few different people, including more information on that S21 units that are coming out. And then also a show with Blockstream and Adam Beck. So stick around for that one. Colin, we'll see you after this weekend. Peace, man.
Have a good weekend, everyone. Pieces, y'all.